Good morning, good evening, good afternoon, wherever you are watching this. This week we have a lot to go over, from interest rates, intervention risks, exchange outages, and even an underdog story developing. I'll unpack it all and I'll also share how I plan to trade it. And if you stick around to the end of the video, I'll go ahead and share my current active trades and how I plan to manage those. So last week, the overall theme was interest rates. I'm gonna go ahead and start actually the week before. The interest rate odds for the US in December was actually 29%. And then at the very end of the week, we had a Fed member daily kind of made some dovish remarks. I'll go ahead and put them on the screen here. And so after that comment here, well, actually before that, the S&P 500 was kind of trading at this level here, this very important 6,500 level. The same goes for the Nasdaq as well. So we kind of poked below here for the Nasdaq. This was pretty consistent across equities. There was a sell-off just because the odds for a December rate cut were taken off the table, and so that's a negative story for equities. And then at the very end of the week, Daily went ahead and gave remarks, and then the CME Fed Watch tool throughout the day increased the odds of a December rate cut. It went from 29 to like the 50s and then the 70s. And at the time of recording this video here, we are at 86.4% as of the close on Friday, November 28th. So you can see how sensitive markets are to this, rate cut story. Rate cut odds were taken off just for December. We sold off here. We were at this very crucial support level, in my opinion. And then as soon as the narrative shifted, rate cut odds went up again. The market really liked that. Now, when it comes to the dollar, right, the dollar lower interest rates, it's not a good sign for the dollar. So the dollar went ahead and got up into the 100s here, and it rejected it. So right now we're trading at the 99.479, just shy of that 100 handle. We traded up here into this resistance, right? This was previous support many times, 1, 2, 3, 4, 5, 6 times. We traded below, and now this is acting as a firm level of resistance. And so now the dollar is trading lower here. If we continue to see less odds of a rate cut going into Q1 of 2026 and beyond, then we can see a further decline in the dollar. When it comes to target levels for the dollar, so this is a weekly time frame. So if we go down to the daily here, and I just put a fib level from low to high, this first level is going to be the 38% level. Then we have the 50 and then the 61.8. So those are the levels that I have marked up here. I would like to see, honestly, a continuation in decline in the dollar, just so, if I'm personally a little bit bullish on the dollar when you look at interest rate divergences amongst others. When you're trading currencies, is very much a relative thing. So you're not just trading the US dollar, you're trading the US dollar against the yen, or the euro against the US dollar, the pound against the US dollar. You get the point. So when it comes to longer term picture, I would like to see a further decline in the dollar, just so I can pick it up and buy it. And perhaps this 96 level was a floor. And then if it gets down here, or the 61.8% level, then I can take a look at the overall macro picture, and if it makes sense, then I will be picking up some dollar. If you look at counterparts to the dollar, like the Australian dollar really liked that risk on narrative. So the dollar declined because interest rate cut odds rose for the dollar, so the Aussie liked that very much. Another risk asset like the Aussie, the New Zealand dollar, that one actually caught a bid there. I was really hoping, the New Zealand dollar was my favorite chart, honestly. So if you just look at the weekly chart here, if you look at this 1, 2, 3 times here, I was really hoping to pick it up right here at this level. So what I'm looking to do, and what I actually did, was I bought the New Zealand dollar as we were trading higher, and my target for the New Zealand dollar is going to be somewhere in this 5,800 level. I don't want to get too greedy, right? Because this could be a very strong level, as we see if we just look left here. So if we do get up to this level, I'll take my profits. If we kind of break through it, fine. I'll just be leaving money on the table. But again, I also want to see, if we get to this level here, and if you reference the dollar, right, and we start approaching this 31.8, that 50% level that's in there, and also the 61.8%, if they start holding, then, the New Zealand dollar will start to retrace here as well. So I want to be mindful of that as well. The euro, not much data out of the euro. So this is a weekly time frame. Let me go back to the daily here. It kind of sideways, not my favorite chart. The UK did have some data, broke out above here. Perhaps we can get a short opportunity again, maybe at these higher levels. I'm not a big fan of trading the pound, so I'll kind of leave that there. Now, one of my favorite charts and a trade that I'm actively in is the dollar yen. So the Bank of Japan officials from Japan have voiced that, we're getting to these extended levels as far as the yen becoming very weak, and they voiced that they are willing to intervene. Now, the caveat is no one really knows when that's going to happen. But when they do intervene, price action tends to be very, very violent. So 2024 here, this was when Japan went ahead and stepped in recently to help depreciating yen. And as you see, right after that, we saw lots of depreciation in the US dollar versus the yen. Another event was September 22nd, 2022. That's going to be like around this area here. They intervened initially, kind of chugged higher, but then we ultimately fell many pips. Let's see, October 22nd, where if we can find that, we're gonna go to the daily. That specific candle was a 500 pip candle. So this is the candle here, or September 22nd. Sorry if I said that correctly. And the range for that day was 566 pips. So they went ahead and intervened on this day. So if you just take from the open of that day, again, like I said, we kind of went higher after that intervention, but ultimately we chugged lower about 1700 pips. So yeah, if you can stomach that initial whipsaw, the trend definitely does tend to go back in the direction of the intervention, in this case helping a depreciating yen. So that's one thing to watch out for. Again, we are getting at those levels. We don't know when exactly the intervention is actually going to come. So I took a stab at it, right? But there is a chance that we can continue to chug higher, and I'm very aware of that risk. It's very much a calculated risk, but we kind of hit this level, this 157 800 level, and now we're kind of chugging lower. So if we kind of just reference what happens when typically interventions, there's a lot of volatility, there's a lot of whipsaw, but the overall trend to the downside is very, very steep. As well, you have to keep in mind that when you're trading dollar yen to the downside, you do have negative swaps. And what I mean by that is, depending on the direction of your trade, you will pay or be paid by your broker for holding that. It's called a carry. So for every day that you hold the trade over, you do have to pay that cost. So if we look for dollar yen, it is a pretty steep interest rate divergence. So the base rate for the US is 4%, the quote is 0.50 for Japan, and the divergence in that is going to be 3.50%, and that's what you have to pay if you're going to sell the dollar yen. If you look at this case, if you're going long dollar yen, that you will be paid that. Now you do have to consider an admin fee. So every broker is very different. Some charge 1%, some charge less, whatever, give or take. But yeah, that's what you can ballpark expect to pay. So to sum it up here, I am paying to be in the trade. So that will eat into my overall profit, if there is any profit for being in the trade. So that's another thing that you have to be mindful of. Dollar CAD, another interesting trade here. So, well, not a trade, I'm not in the dollar CAD trade, but it's a very interesting story to follow. So dollar CAD, if we just go down to the weekly time frame here, very, very volatile, but nonetheless, this was the overall level. So this was like the pre-tariff, everything like that. Tariffs came in the beginning of the year, right? It was Mexico, China, and Canada, 25%. So when those headlines really hit the tape, if you can see towards that end of the year, going into December, January, we really popped here. And so now we're kind of back to that initial starting point. And the question is this level going to continue holding, right, for the downside of the USD CAD, or are we going to break below? And that's the real question at hand. And if you look at the overall picture for Canada, right, this is an economic heat map. So what this software does is it gathers all of the macro data for a specific country and consolidates it and puts it all in one very easy to read visual, and it kind of gives you a good understanding as to what the overall health of the economy looks like. So in this particular case, Canada, you can see that most of the things here on the right are very bullish for the currency. The only thing where they're really lacking here is the inflation front when we look at the PPI, but we will get some new numbers in the next coming month, and that'll be a really good sign as to what Canada's economy is looking like. And if you look at the bottom right here, this CAD impact, this little speedometer looking thing, this is the overall data if it's missing or beating expectations. 83% of the data points are beating expectations, which is a really good thing. And going towards the end of the week, we did see some data outages for the CME. Nothing really happened though. Price action was pretty steady. It was over the Thanksgiving holiday, so there was very thin liquidity, very thin trading to begin with, so it wasn't very much impactful. Everything opened as usual on that Friday, and then actually the equities ended green on the day. The Nasdaq ended at 0.69%, the Dow at 0.57, and the S&P at 0.44. And as far as the two trades that I'm in, I'm only in two trades. I'm in the New Zealand dollar as well as the dollar yen. I'll pop up the P&L here just for transparency purpose. And I'll go over the New Zealand dollar here first and how I plan to manage it. I kind of actually forgot to go over the actual story behind the New Zealand dollar. So they went ahead and cut interest rates, but they did go ahead and voice that they're kind of done for now. So that really popped up the New Zealand dollar. The week ended about 2.5% in the green for the New Zealand dollar. So that was good. This was the initial reaction, and the trade that I took here was I just wanted to see a continuation of that, and we did see that. So I'm interested to see how it plays out here. Most likely going to just place my stop at break even, but I wanted to place my stop loss right below this like initial push downwards. If we would have saw a continuation of this, this fill of this, two impulsive candles, then I would have just, got stopped out, because most likely than not, after a very impulsive move, if you see a retracement, sometimes the candles do get filled and there's a mean reversion type situation. So that's going to be the New Zealand dollar. Again, I'm going to target that 5,800 level for the New Zealand dollar, and then I'm going to take my profits, and like I mentioned earlier, if it continues higher, then so be it. I leave money on the table. But kind of just referencing that DXY correlation, if this gets up here and DXY is getting to that, that 31.8 or that 50 or the 60, 60% retracement, then I'm going to, kind of see how I can pivot there. As far as the dollar yen, I did take a stab at this narrative that the US dollar is going to continue cutting their rates, as far as that risk of, Japan wanting to raise their interest rate or even potential intervention for the Bank of Japan. So I went ahead and took a stab at it. We just kind of flip on the weekly candle here to stop right above this weekly candle, and I'm looking to target this level here. Reason being, if I do another Fibonacci retracement level from here to here, this lines up with that 38.2% retracement. As far as the risk management goes, if it stalls out for too long, I might just pull the plug just because of that swap. I don't want to eat into it. Hopefully, if I pull out, I am in some profit, so it kind of washes off the swap cost, and so my operating cost is not going to be too hefty. But we'll go ahead and see. So that's going to be the plan for the dollar yen. And if there's any changes to the trades, I'll be make sure to let you know very promptly. I do intend to make videos more consistently now. I did take a little bit of a break, but I am now fully committed to providing more content. Again, thank you guys for watching. Have a blessed rest of your day and trade safely. Bye-bye.